and welcome to Mint. I am Nasrin Sultana. As the markets was going through a rough patch in the month of August, net inflow into equity mutual funds saw a growth as compared to July. Also, there was a growth when we compare this number to August last year. What does it mean for the markets and what is the way forward? To understand that, I am joined by Mr. Mahesh Patil. He is the CIO-Equities of Aditya, Birla Sun Life AMC. So, Mr. Patil, what has led to the kind of robust net inflow into equity mutual fund in August?
So, I think we have seen this time around the inflow has come across various schemes. It's been the large cap, multi-cap, small and mid-cap category. So, I think investors probably with the market correcting by around, Nifty has corrected around 11-12% from its peak, and the broader correction in the market, I think it's a good time. People are thinking that it's a good time to invest. And if you look at the data, there's not much change in the SIP book. It's been pretty steady for the last few months. There were redemptions which were happening in the funds, right? Because of this uncertainty on the domestic front and the global, we see a lot of HNIs pulling out money from the market. So that outflows have kind of abated. And that's why the number is looking better compared to around 5,000 crores on a monthly basis net inflows, what we saw around 3-4 months back. It's now touching around 8,500-9,000 crores. So I would say it's some kind of the redemptions have actually stopped. I think that's the reason why the numbers are looking good.
So do you agree that domestic liquidity is very critical at this point of time, because FIs are on a sell-off? They have sold a huge chunk of money from July and still going on. Do you think that this domestic liquidity is very critical to keep the markets buoyant?
Yeah, so I think it always helps, when you have a balancing flow coming in. So FIs were pretty good buyers in the beginning, first half of this calendar year. In the last 2 months only, we've seen the FIs suddenly turn negative, on the back of global sentiments where they have pulled money out of emerging markets, and also domestically after the budget, and things haven't really gone down well. So I think the domestic liquidity which has been coming into the market steadily, I think it's a good balancing figure over there, because that provides some stability to the market, and more so the mainline stocks.
Right.
And I think that has been a characteristic, I think, where I think in earlier times when the FIs were really dominant in the market in terms of not only ownership but also in terms of inflows, any change in that sentiment used to create a lot of volatility in our markets. I think that to some extent has come down, because domestics are now, if not larger, equal force into the market in terms of the net inflows.
Right. So what is your overall outlook on the markets going ahead? Because like you mentioned, there are headwinds, there are concerns about the macros. So what is your outlook?
So the outlook on the market has been, short-term outlook has been a bit cautious, because we have seen some challenges in terms of growth. I think our outlook on growth, what was there at the beginning of this calendar year, has considerably come down, and we've seen slowdown across segments in the last 2 quarters. The earnings growth also has been weaker, and there has been a significant downgrade to earnings for this fiscal year. I mean, we were looking at earlier, just about 6 months back, around 22% earnings growth for Nifty. I mean, that number has now come down to around 13-14% or so. Again, if you remove the corporate banks, their growth will be in low single digits. So I think in this kind of environment, unless we see a pickup in terms of domestic growth coming back, difficult to expect the market to really do really well. But having said that, I think we have seen a good correction in the market. Across the broader market has seen a good correction. Many stocks are now at levels which are looking fairly attractive. And also on the positive side, I would say that the interest rates are coming down. The transmission has not happened, but you should see that happen in the next couple of months or so. So with lower interest rates, and also the fact that the government is now probably woken up to the fact, I think earlier the government was not acknowledging the fact that there is a slowdown. And in the last few weeks, we have seen the government trying to really acknowledge that and taking measures to really boost the economy. I think those will be taken pretty constructively. So the market should find support over here. So it should stabilize for some time. And slowly some of these measures by the government and the fact that interest rate transmission happens, you should see a pickup in the economy sometime in the latter part of this fiscal year. And that's where the market will start to again do better. So I think in the near term, probably the market should consolidate. Again, some volatility because of global factors. You keep on hearing about what's happening between Trump and China, how that trade talks play out, would lead to volatility in the near term. But I think clearly from a near term perspective, remain around sideways kind of a movement. But if you take a longer term view, say a 3-year view, then I would say that the economic growth, I think, would not remain at these levels, right? Currently, we are growing at around 5% or so. We expect we can trend around GDP growth of around close to 7%
But
or
rupee
so.
is also getting weaker by the day, and in August it was actually one of the weakest currency in Asia. Do you think that kind of that may have an impact on the earnings, because you're saying interest rate transmission may happen in the next few months?
I don't see rupee, it has depreciated, but nothing too alarming over there, because our overall current account balance and this thing is fairly comfortable. Oil is at a level which is pretty subdued. BOP's balance of payment is also fairly placed. So I don't see any major pressure on the rupee. The rupee has depreciated in line with the dollar appreciation and the general depreciation in currency which we have seen across the region. Again, the impact on that earnings also is not meaningful. So, but again, outlook on interest rate cut, I think clearly the RBI and the government are trying to push in the rate transmission, and we've seen recently the RBI government are we asking banks to link their rates to the repo rate. So I think these measures should, I think there is enough room for rates to come down. I mean, the credit spreads currently in the system, if you talk about corporates below AA, their borrowing cost is still very high. The spreads are very, very high. I mean, they are at the highest level we have seen in the last many years. So there is scope for that to come down. And that happens, that has a multiplier effect. I mean, your cost for...
But when do you see that coming by? Because right now we have not seen that kind of helping the companies.
So it's a combination of factors. I think one is the overall, some of the credit markets are still pretty tight. Okay, there is some issues on some of the NBFCs. If we see some resolutions over there, I think you will see some normalcy happening in the credit market. There are a couple of companies which have NBFCs which are looking at resolution plans. As that gets worked out, you would see that fear which is there in the market will probably come down a bit. And also the, I mean, further policy rate cuts are possible, looking at where inflation is and looking where our growth trajectory is. So I think given that factor, I think there is, if you take next 6 months down the line, there is enough room for actual borrowing rates for corporates and for individual borrowers, retail borrowers, to come down significantly.
Right. How serious is the concern about the slowdown? We have seen it in last few quarters, especially autos and consumer-focused companies. You think that's going to be kind of addressed in the September quarter as we just close the quarter? Government is also kind of probably working on a GST cut. We are not very sure about it. Do you think how serious are the concerns?
No, I think the slowdown is pretty serious because it's spread across various segments, and there are multiple challenges which are there which needs to be taken care of. One is on the NBFC front, the credit markets, where things are not moving. The money is not rotating, right? While there is enough liquidity in the system and RBI has done to improve the liquidity, the flow of money is not really happening from the banks to the NBFCs and then on to the actual borrowers who require the capital. So I think that would take time, to really percolate it down. But I think it should happen. Again, we've seen that because of a lot of the promoter level, there is a challenge because wherever promoters have levered, they are facing challenges. So the risk appetite is slightly low. So again, the capex investments and other investments by the corporates would take time to revive. And at the same time, we've seen the rural economy has seen some kind of a slowdown. I think the monsoon this time is good, though there have been floods at various states, but I think that means that the Rabi crop should be good. So second half, I think you should see the rural economy starting to do better. And all of the stimulus given by the government to the rural economy will start to percolate down. So that should work. And mind you, the government machinery was also not working just pre-elections and post-elections. So a lot of the money flow from the government was halted. I think now that money has started to flow in, government is starting to release the payments. So as that money starts to move in and new projects get announced, I think you will see that percolating down, and that should lead to improvement in the overall growth. But I think there are challenges in a few sectors. Job creation is a problem, and to that extent, even consumption has taken a beating.
Right.
So I think a combination of factors, interest rates coming down, government spend picking up, and overall confidence picking up, I think would lead to a slow and gradual. So the recovery is going to be very slow and gradual. You won't see a quick recovery in the economy.
Right. Right.
And mind you, the global also economy is weak, right? So there's no tailwind from exports.
Right.
So the recovery should be fairly slow and gradual from here. Foreigners are fairly light on India at this point in time. I mean, at one point in time, the FIs used to have in the fund, the emerging market fund, India used to be an overweight of around 3 to 4%. Currently, it is below 1%. So there is room for them to increase their exposure to India. And I think some stability coming on the global front. I think you should see the flows
So
coming
it's a
back.
combination of both macro
Yes,
factors and,
both
and
global international risk appetite, how that changes
Right.
as well. But I think the way things stand, I think we've seen the markets even globally. We have seen now almost 16 weeks of outflow from emerging markets. So it's a pretty long stretch.
Right.
So we probably reaching a level where you should see an end of that and some reversal of flow coming through.
On that note, thanks a lot for the insightful conversation. So there could be volatility in the markets going ahead. FIs may be on the sidelines as long as the macros in both in domestic and global front is not addressed. But according to Mr. Mahesh Patil, the DIs will stick to the markets. We'll have to wait and watch how the numbers pan out for the month of September. Thanks for watching. For more details and updates, stay tuned.